Hey guys, it is Julie here with TipRanks, and today we're taking a look at two stocks that score a perfect 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that score a 10 out of 10 on the TipRanks Smart Score and also come in with a strong buy consensus from Wall Street. The TipRanks Smart Score, of course, looks at 8 unique factors and measures a stock's overall likelihood to outperform the market. So we're going to take a look at these companies, what it is that they do, and what Wall Street's predicting for the stock's future. You can follow along over on TipRanks.com or by downloading the TipRanks mobile app using the links in the description down below. Now let's get right into our perfect 10 stocks. First up is a company called Camtek. Their stock trades under the ticker CAMT, currently priced just shy of $80 per share. They've seen some huge growth this past year, growing 198% and climbing 21% in the last 3 months. They score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, very positive crowd wisdom, and very bullish new sentiment. Camtek is a leading manufacturer of metrology and inspection equipment, and they also provide software solutions to various segments of the semiconductor industry. Their systems inspect and measure wafers throughout the production process of semiconductor devices, covering the front and mid-end and up to the beginning of assembly. Their systems inspect wafers for the most demanding semiconductor market segments, including advanced interconnected packaging memory, CMOS image sensors, MEMS, and RF, serving the industry's leading global IDMs and foundries. Camtek's innovation has made it one of the technological leaders in the field of inspection and metrology in the semiconductor market segment it serves by delivering solutions that have become the industry standard for many applications. Last week, on February 20th, Camtek did report their fourth quarter results. They did beat on earnings and also provided some outlook for the first quarter. For Q4, they reported revenue of $88.69 million, which came in ahead of expectations, and earnings per share of 57 cents, which beat estimates by 4 cents per share. Looking forward, the company did say that they're expecting about 30% year-over-year growth in the first quarter with record revenue for fiscal 2024. Following that Q4 earnings report, we have had a handful of Wall Street analysts reiterate their ratings on the stock, and that includes one 5-star analyst from Needham. Along with their buy rating, they also increased their price target, noting the substantial order volume in the second half of 2023, which included nearly 300 machines, and the company being anticipated to reach record-breaking revenues in 2024, regardless of the contributions from the front-end revenue. This suggests a robust and growing demand for Camtek's products that's expected to sustain into the next year. There are 7 current analyst ratings on the Camtek stock, and it does come in as a unanimous strong buy. The average price target comes in at $88.57, which would be an upside potential of about 11% from current prices. Down below, we can see our detailed list of analyst forecasts. On the low end, we do have a buy rating here from back at the end of November with a slight downside. And on the high end, we have a price target from a 5-star analyst at B. Riley with an upside of 28%. And our second 10 out of 10 stock is Copa Holdings. They trade under the ticker CPA and are priced at $99.61 per share. Now, they have seen some more ups and downs over the past year, and overall are up 13% and have grown 7% in the last 3 months. They score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, very bullish news segment, and increased crowd wisdom. Copa Holdings is an airline company operating 2 subsidiaries, with the bigger of them being Copa Airlines. Copa Airlines is an international carrier based in Panama and operating primarily in South and Central America, the Caribbean, and North America. Their smaller subsidiary, Wingo, is a low-cost carrier operating mainly in Colombia. With a fleet of 97 aircraft, they currently offer approximately 327 daily scheduled flights across 78 destinations in 32 different countries. Copa also has a strategic alliance with United Airlines that encompasses joint marketing strategies and code-sharing arrangements. Now, with the recent grounding of Boeing's 737 jets, there were some impacts on Copa as they did have to cancel flights. But in their Q4 report, which they released on February 7th, we still saw an earnings and revenue beat. For their fourth quarter, they reported earnings per share of $4.47, well ahead of the $3.92 expected by analysts. And for their fourth quarter revenue, they saw an increase of 3% to $916.9 million. They said it was mainly driven by higher capacity. As a fun fact, the company was also recognized for the 9th time as the most on-time airline in Latin America. Copa also announced an increase to their quarterly dividend. They'll now be paying out $1.61 per share for a dividend yield of 3.3%, with an ex-dividend date coming up soon on February 28th. Weighing in on Copa Holdings following that earnings report was an analyst from Bank of America Securities. With their buy rating on the stock, they said that they were optimistic about Copa Holdings' potential for sustained high margins. The company's guidance for 2024 suggests a positive demand environment with an anticipated increase in capacity and a healthy revenue per available seat mile. And we also heard from analyst at TD Cowen. They noted Copa Holdings' reputation as one of the best managed airlines in the industry, being further supported by their consistent operational performance and punctuality, which have been key drivers of their earnings success. Overall, Copa Holdings comes in as a strong buy with 4 buy ratings and 1 hold. And the average price target of $162 would imply upside potential of 63% from current prices. Looking at the most recent price targets down below, we're actually all pretty closely grouped together. Even our hold rating is our high-end price target with an upside of 80%, and the low end back in November is an upside of 35%. So that is a quick look at 2 stocks that not only have a strong buy rating from Wall Street, but also score a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these 2 companies in the comments down below. I always appreciate hearing from you guys. And of course, please keep in mind that these videos are never a suggestion to buy or sell any specific stock. So please make sure you're always doing your own due diligence and research. Thanks so much for watching. Have a wonderful day, and I'll see you back here next time.